Good morning, guys. Welcome to Professor Vipin's YouTube channel. In today's video, we're going to understand RBI and how they in fact tanked the markets as of last week. So last week on February 7th, RBI cut the repo rate to 6%. It was previously 6.25% and RBI brought it down to 6%. Now, there are four interest rates which are regulating banks in India. CRR, which is cash reserve ratio, that is the amount of money a bank must keep in RBI. SLR, statutory liquidity ratio, which is the amount of money a bank must keep in its own vault. And repo rate, which is the amount of money RBI is going to charge when a bank borrows money from RBI. Now, I'm going to tell you in some time why a bank should actually borrow money from RBI. Reverse repo rate is when RBI is borrowing money from banks. Now, repo rate is used very often. Reverse repo, on the other hand, is not so commonly used. That is, rarely do you see that RBI takes money away from banks. Now, the business of banking is an expensive business, and that's the reason why you rarely see banks open their branches in rural India because the cost of operations is very high. You may also notice that there are many banks that have a high deposit rate as well. That is, they tell you to keep a high minimum balance of 10,000 rupees or sometimes even more than that in order for you to maintain your account. Simply because running a bank is expensive, so they levy these charges in order to, in fact, keep their operations running thoroughly. Now, what happens is, because a bank's operations are very expensive to run and there are so many transactions happening on a day-to-day basis, a bank may not have adequate funds to run its operations. So in order to make sure it has adequate funds, it borrows money from other banks, or on the other hand, it can borrow money from RBI itself. So when a bank has to borrow money from RBI, the repo rate comes into effect. That is, the bank is in fact going to pay an interest rate of 6% on how much ever money it's borrowed from RBI. And this is the way, in fact, repo rate affects the banking operations. Now, how does the repo rate actually affect you? A higher repo rate means the amount of money a bank has in its vaults is reduced. When I say in its vaults, in this case, I mean the amount of money they have for their day-to-day operations. It could be for giving out loans. It could be for giving out, any day-to-day operations of the bank, particularly loans we're talking here. All that is in fact minimized if RBI has a higher repo rate. A bank will think twice before that borrowing it, just like how you and I would think twice when we see that, okay, this loan is too expensive for me to take up. Banks too, okay, RBI is having too much of an interest rate. I'm not going to take up such a high interest rate. Now, it may seem like 6.25% was the previous rate and now 6% is low, has been slightly lower. What difference could it possibly make? 0.25% when it comes to the thousands and thousands of crores that's borrowed regularly makes a very big difference on the payments which a bank needs to make to RBI. So when they see even say 6.25% or 6.5%, that really in fact targets the bank's operations significantly and negatively. So here, when RBI has lowered the interest rates, it's actually tempting these banks to in fact borrow money from RBI. Now, when they are in fact able to borrow such a large amount of money from RBI, how does that affect you and I? As soon as more money is available with these banks, they start giving out loans. I remember this because when I was growing up, if you wanted to in fact take up an automobile loan, you had to approach a bank, and a bank could in fact investigate thoroughly all your details and then decide, you are eligible or you may not be eligible to take up an automobile loan. Now, as the years started to go by, banks had so much of money with them that they in fact tied up with these different car dealerships and bike dealerships and telling them that we will process the loan right here. And you're able to see that even today. If you're looking to buy a car or if you're looking to take up a bike, you will see that board put up there saying that easy finance option available right here. Now, these guys had so much of money that they could expand their loan servicing operations to the dealership itself. Now, that led to many loans, many automobile loans, in fact, defaulting, and banks learnt a lesson from that. Even growing up, I remember banks were ready to give so much of credit cards to anyone and everyone. It led to the operations of banks being affected, and many people ended up defaulting on these credit cards. All this happened because banks had so much of money with them and they wanted to, in fact, give loans to people at as low interest rates as possible. Even I remember the first job that I had when I was working in Infosys BPO. I had this dream that I would, in fact, purchase an apartment, and I looked up the cost of an apartment loan or a housing loan, and the interest rates were just about 7%. Now, I considered 7% as incredibly low because a few years later, that interest rate doubled to sometimes at 14% or 15% because they had a lot of money with them. Because the repo rate back then was very low, they could give out these loans at just 7%. As the repo rate went up, RBI increasing the repo rate, of course, banks said, yeah, we can't give out loans like how we did before. They had to increase the interest rate to deter people from taking up these loans and increase the interest rate to say 13, 14, 15% over the years. So this is how the repo rate can impact you and I. Now, this is a comment, in fact, which I saw from a senior economist at Capital Economics. So he's given this comment saying that given core inflation is already quite high, we see headline inflation rising sharply towards the end of the year. So what the RBI governor has done is cut the interest rates in response to a temporary fall in the headline rate, which is at best seems quite short-sighted, said Gareth Leather, senior Asia economist at Capital Economics. So what he's actually trying to say here is, and I was able to write a bit of analysis here, the retail inflation and wholesale inflation prints for the month of January will set the tone for the market. Lower fuel prices further eased India's retail inflation in December, making the inflation rate at just 2.19% compared to the inflation of November, which is 2.3%. The annual inflation rate based on monthly WPI, which is the wholesale pricing index, one of the measures used to measure inflation, stood at 3.8% in December compared to 4.64% in November. Now, when you are in fact lowering the repo rate, you are making a lot of money available to people, and money here I mean by credit. The more amount of credit that's there for people, we start to buy more things. Because that's the very foundation of any economy or any country's foundation is based on that. Rarely do you see people say that, if I want to purchase a car, I'm going to save money for 8 years or 10 years and then purchase my car. You're going to say, my income is say 50,000 per month. So therefore I can afford a car and therefore I will be eligible for a loan. You don't say that I'm going to save 50K for my entire year and then maybe buy a second-hand car. So now, as soon as you see this, you first approach a bank and then you realize that, oh, this rate of interest is in my favor or is not in my favor. And generally, when the repo rate is lowered, the lending rate comes into your favor. And when the lending rate comes into your favor, just like you, there'll be tens and thousands of others in the entire country who are in fact eligible to take up a new car. And this is what is going to trigger inflation again. Remember, inflation happens when there is so much money in the market that the value of money drops because the producer is unable to deliver these goods and services to them. A simple example where you guys can see inflation impact you is when you're booking an Uber or when you're booking an Ola cab. In case there are too many people trying to book or in case there is a peak hour booking, they'll immediately increase the cost of that booking because they can't cater to everybody. Ola and Uber have only limited number of cars, but people tend to have unlimited money. So they want to see, okay, how many of you can actually afford our service by having that surge price put in place. So this is the way you're able to see inflation, in fact, hit the economy and hit the money supply of this country. If there is too much money in the market, the value of money drops. Too little money, of course, and the value of money actually goes up. In 2008, there was in fact very little money in the economy. So therefore, the interest rates was just about 7%. Now, as the year started to go, the money in the economy started to increase. More people are able to take up a loan, but banks can't give loans to anyone and everyone. So they increase the interest rates. And of course, RBI was the main foundation for them to, in fact, keep up the interest rates high. Apart from this, you need to understand that RBI is the monitor and regulator of the monetary policy of this country. Monetary policy decides how much of money should be there in our pockets, in our ATMs, in our banks in this country. Too much of money leads to too much of inflation. Too little money, of course, can halt growth. If you have too little money in the economy, you can't see the automobile industry do well. You can't see the healthcare sector do well, the tourism sector do well, and so on. So there is a fine balance as to how much money should actually be there in the economy. And that, of course, can only be done when RBI does, the increase and decrease of the repo rate quite regularly. So this, folks, is about the repo rate and what is the reason why the markets actually tanked last week. When there is an increase in money supply, like I said, there will be an increase in inflation. So therefore, the markets did not respond very well due to that possible, by the way, increase in inflation rates. So this is about RBI cutting interest rates as of last week. Anyway, folks, thank you for listening to me. Do like, share, and subscribe. And a big thanks for all you guys for helping me reach 10,000 subscribers. So once again, have a nice day. See you guys. Bye.